Let's welcome on board Ajay Bagga as well. Ajay, hi, afternoon. What's it looking like for the market? It's quite a move that we've seen in the last 10 trading sessions, and now we're almost knocking on 24,000, another 300 points only to go.
Yeah, a very welcome move, and I think the big change is the FIs moving to inflows. I think that's the big change. Globally, the rotation has started on the margin. The faster money is getting out of the US, though the US retail, the Korean retail, Japanese retail are still investing marginal money into the US stock market. So over last year, if 80% of all equity investments were going into the US markets, it's come down now to about 70%. Sentiment is eroded towards the US market, the US economy, US policy making, but the behavior has still not followed through. When the behavior follows through, there'll be much larger flows coming into markets like India. When the true diversification happens. US is representing 30% of the global economy, but it is contributing 60% of the global market cap. Last year, it took 80% of global equity flows. So that's the kind of exceptionalism that we have seen in an economy which was running 6% fiscal deficits with $36 trillion of debt and having to service an interest of more than $1 trillion year on year. Uh, I think Trump is more a catalyst. This was inevitable. This was coming. I think he has accelerated the move out of the US exceptionalism. Money will go to Europe. Money will come to Japan. Money is already going to China. And slowly the money is coming back to India.
Right, slowly money is coming back to India, and hopefully that sort of comeback only picks up pace going ahead. A very good afternoon to you, Mr. Bagga. The shadows are joining in the conversation. So in light of the way how the scenario is changing right now, which sectors do you think that you will be tilted towards?
See, this is more top-down money that's coming in. It will go with the weightages in the index. So financials will outperform. That's what we have been saying. The turnaround that's coming is coming in defense. Around May, June last year, we were warning on defense that valuations are looking very skewed. Valuations are not cheap, but now the flow through of orders is coming. The third big thing is one huge catalyst is government expenditure picking up. See, normally at the peak last year, before the election, say January last year, the government could allocate about 1 lakh crores a month to capex and roll out orders, pay contractors. 1 lakh crore was coming in from the government on average. That fell as low as 20,000, 24,000 crores for a big chunk of last year. Right from March onwards till about September, it came down to 24,000 crores a month, went up to 45. December, we hit finally 95,000 crores. And January numbers are still being collated. It could have reached 100,000 crores again. That's the big shift that's happened. So we have blamed the markets, we have blamed the valuations. FIs, of course, went off. Earnings were not good enough to justify the valuations. But a big picture was also the national elections and the policy logjam that happened nearly for 6 months. The expenditure from the government end really stalled. If 100,000 crores you are spending normally, and you start spending 20,000 crores, what does that entire ecosystem do? What happens to all those contractors, to all that labor? That marginal contract employee gets laid off. A lot of it comes back to this. And now, as that is catching up, next year is looking good earnings wise. It's looking good recovery wise. And guess what? Valuations are at 10-year median values or little less than that. So it's not very frothy valuations. We are setting up nicely for a good rally in India, a good recovery in the Indian markets.
Interesting. And that's precisely what I wanted to talk about as well right now. Some of the sectors that Ajay just mentioned. In fact, let's bring up, how the performance for the likes of L&T, BHEL, we were just tracking those sectors, some of the construction spaces like an NCC, for instance, lot of order inflows, all those stocks are doing quite well. Defense, of course, is the other pack, which has held out quite smartly. In fact, just last week, we were chatting with a couple of managements as well and getting their opinion along with some of the experts as well as to where they believe the move ahead for some of these defense companies is going to be, whether it's just about order inflows or whether they'll have revenue recognition as well, anytime soon or not. HAL right now, of course, is spiking up almost 6% as we speak right now. And BEL, which has been the other preferred one, should also come up for you on your screens. Just last week, we were talking about as to how some of those shipbuilding names as well were looking pretty smart. So the likes of GRSE, SE, Mazgaon Dock as well were looking very, very smart indeed. Kunal, a varied pool when it comes to defense, if you were just to club it under one umbrella. And last week, we were talking about strength in Mazgaon. Today, you've got a solid move coming in on HAL. Pick up one stock for our viewers.
Yeah, difficult to just pick one, Aisha, frankly, because I think there are excellent chart combinations for these stocks. Now, the top three names which are there on my radar, it starts off with BEL being one of the stocks which is broken past about the 200 DMA, very much on a much more stronger trending note, followed by HL, which is making a very strong and I would say dramatic comeback about the 4,000 plus mark. And then Mazgaon Dock, and I think specifically about all three of the names, Mazgaon was one of the first ones to try and make a comeback, breaking past about that series of downward sloping trend line. Was one of the first ones to show signs of absolute or rather relative strength in the last 2 months or so of the market sell-off first, and now managed to make a comeback for itself. So I believe that all three of the charts are poised up quite well. And what should this do is actually trickle this confidence back to the other underperforming names, because we have so many stocks, the likes of GRSE, Cochin Shipyard on a relative basis, which have been huge underperformers. I think you probably come to a point where many of these underperformers will also get a leg up pretty soon. So my sense is that the top three names on the defense pack overall are the likes of BEL, HL as well as Mazgaon Dock.
All right, so that's the take coming in on the defense pack. But Kunal, what are your BTST ideas for our viewers?
So I'll go with a couple of buy calls. The first one is about Paytm. That's a chart which is making a comeback about the 750 plus mark. So would look out for targets in the range of 830. Stop loss could be now kept at 750, which is the breakout point. And the second is about IEX, something which I discussed in the morning also. Looks attractive. The stock breaking past above a downward sloping trend line above 175 mark. So targets of 186, stop loss at 170.
Okay, Paytm as well as IEX, two buy calls coming in from Kunal. Naresh, what about your BTST trades?
So two bounce back trades. First is a buy on Container Corporation, which has seen a large correction and has started making a comeback in the last two sessions. The stock is at the same price where it was back in pre-COVID times. So good recovery possible here. BTST target price of 730, stop loss at 708. Second is a buy on Supreme Industries, which has also seen a large correction, making almost a double bottom here. Stop loss at 3550, target price of 3650.
All right, so those are the BTST ideas coming in from both of our experts. Mr. Bagga, let me come to you and get your view actually on the Realty pack. How is this one looking to you, and do you think now, given the fact that this one also seen a good healthy correction and now it's bouncing back as well, right levels, right value to buy some of these names?
I think the demand is there. Valuations are not cheap again, but they corrected very sharply and coming back. See, what is happening? Basically, there is a huge monetization of land bank happening. You have the ecosystem to fund these purchases of, much above the normal salaries. So what we are really seeing is people buying homes on the down payment and the affordability of the EMI part. So that has become very mainstream. That is the big change that's happening. And third, there was this move on the I would say, the more frothy level where ESOP, cashing out ESOPs and other things were getting invested as well. But that's a small portion. It's large in value, but volumes wise, it's small, but it contributes to the bottom line. What is changing in real estate is the shakeout that's happened over the last decade with RERA coming in, with formalization of finances coming in, and the over leverage in the industry going out. So the stronger players have stayed back and they are now able to capitalize on the opportunities that are coming in with the urbanization of India, the formalization of India, and the premiumization of real estate that's happening. So those are the mega trends. Those will stay for a couple of decades at least. These players who have survived will do very well. So again, it's not a buying, it's not a screaming buy right now. As I would say, financials, you can close your eyes and buy the big private sector banks. I think you will be quite well off. Even the larger public sector banks are looking quite good. You will see profit increases, all those things following through. Real estate, uh, not that particularly keen on it. I would rather go for the industrials if in terms of allocating money, but they will do well. You can't go wrong with these real estate players at the current phase of the market, the way they are now tightly regulated and they are under leverage, they are able to bring in lot more funding as required, and their customers are well funded. So the demand is there because of the funding, the entire ecosystem having been created.
Right. Naresh, what's looking like the strongest within the Realty pack? Anything that you would recommend to go long on here?
So that would be Oberoi Realty, which has corrected a lot and making a base. So that is where I would expect a recovery towards 1850. And second would be Kolte Patil, purely because of the large volumes that I've seen over the last few weeks, as well as the positive announcement.
Right, that is about the realty pack. Kunal, let me come to you because Mr. Bagga was saying that you can close your eyes and go ahead and look at banks and you can look at buying banks. Do you think which is that one bank where you can shut your eyes and buy right now?
No, then I wouldn't be able to see the charts. No, I think that was on a lighter note, of course. But I for one believe that the ones which are performing very well, they are the ones which still look very attractive. So there's always an anticipation that the ones which have run up high, they would probably be available at premium. So buying these stocks may not be a better strategy. But I still believe that the likes of Kotak Bank and ICICI Bank at current levels are the ones which one should be having as part of your their say core portfolios even at current levels, because what you're talking of is a breakout which has happened for these names after years of consolidation, especially for Kotak Bank. I think 2021 or 22 was where the stock had managed to break past about the levels of 2050 plus mark, and we are seeing this happening right now. This could be a very strong multi-month, multi-year breakout also for the likes of Kotak Bank. So I think it's better to try and stick to the winners or the performers rather than anticipating that any kind of a major underperforming name would give such kind of strong moves.
Right, so that's the take coming in on the banks in particular. Mr. Bagga, what about all of these counters or the sectors that are actually dependent on what exactly happens when you talk about tariffs? Are you looking at any of those spaces, and do you think that IT, pharma, irrespective of what exactly happens when you talk about global scenario, they merit to buy?
See, IT, a lot will depend on the business climate in the US. You saw with the Accenture numbers, 8% of their global revenues come from the US government. 16% of American revenues are coming from the US government. There were media talk that Trump has issued letters to 10 big consultancies asking them to give a multi-year justification which a 15-year-old can understand. That was actually the words of the Trump administrator to these consultancies, that please justify what did you do, what was your impact, and don't give me a huge presentation. Put it as something a 15-year-old can understand. So there'll be a lot of pressure on these multi-billion-dollar deals that they were getting from the US government. Our players will have to see how the business sentiment recovers. Right now, most CEOs are spending time in tariff war rooms. Most government departments are spending time in tariff war rooms, trying to understand the impact of Trump policies. And that's a very difficult, very uncertain kind of a thing to do because even Trump doesn't know by the end of the day what his policy will be. He might announce something in the morning, then somebody brings something else to his mind, and it could change totally. So in that kind of an uncertain environment, what gets hit is business sentiment, new order flow, new investments. So that is going to be an issue for our IT companies. But the good news is that as a couple of months down the line, if we can get a hold on this is how bad things could get, or this is a relief that things will not go this much, I think then you will start seeing our order flows coming in. And basically, the big thing, like Y2K, like the internet came in, I think the big thing is what does AI do for the normal company, normal client? How will AI get working? Today, a friend of mine shared, three queries that he put on AI about me, and most of them put me as a news reader. Nobody saw my 35 years of financial track record. And so I don't know how good that AI is in terms of what's dished out to us as normal consumers. But there are end users, nearly now, uh, thousands of end users that are being brought out. And those have to now be patched into the company's operations, into the company's MIS systems, data analysis, judgmental systems. All that area our companies will do very well. But I think it's got postponed because of the Trump administration and the policy uncertainty that they have unleashed.
Ajay, so good chatting with you today. Thanks as always for your time. Kunal, Naresh, we'll let you guys go as well.